you're technically down over the last time you reported, but you're still making a lot of money.
I remember when Amazon crashed because they only made 110 billion and everyone thought they'd make 111.
Yeah.
They still made 110 billion dollars in a quarter of revenue. Yeah. And I've got I'm not sure where you guys want to take it from here, but I got a couple things that might actually be optimistic to this call. One thing that I've got here, I mean, it's a sentiment chart. So it's showing you how scared and how pessimistic everyone is, which historically is actually a sign of optimism. And so, not calling a bottom here. I mean, we have no idea.
Maybe opportunity, not so much optimism, but opportunity for sure.
Yeah. Absolutely. And so what this chart is showing everybody is this is going back 30 years, and it's showing you all the low points of when people have been the most scared. Basically, this is a chart of how many people think things are going to be better in the near future. And the levels right now are the lowest they've been since the great financial crisis. And so if you think about where we were in a country with the subprime meltdown and real estate down 30% and unemployment north of 10, and everything was just companies going bankrupt and automotive companies going bankrupt and everything that was as bad as it was in the financial crisis, people losing their jobs left and right. Mm-hmm. The current fear right now rivals that. And so that usually when people are as scared as they are, it's a sign that we're close. And so then to piggyback that, the other chart that I've got is actually showing where people are sitting on cash in their savings accounts, their investment accounts. That people
this is a good one.
So scared that they're hoarding cash, they're raising cash, they're selling their stocks, they're selling their bonds. The whole, I'm just going to go to cash and wait till I feel better.
High correlation with the other chart.
That's right. That's right. So our cash levels in this country right now on the average investor are the highest they've been since .com.
Well, and this was specifically, I think, is showing, money manager cash allocations, right? So you have a lot of mutual funds, separate accounts that are sitting on a lot of cash, and those are institutional investors. I don't know if I have the chart of what deposits are at, banks and cash they're actually held at institutions that are not in investment portfolios. This is like abnormally high, cash allocations, but yeah, it's a massive number right now. And that's the thing, at some point, we feel right now like fear is sort of guiding everything, and there'll be a point where it switches back and it'll be greed time again, and prices will rip. I mean, it happens over and over and over.
Yeah, those that will probably be more fun.
And that kind of goes towards too, getting things a little bit maybe more optimistic. As what do we see out there that could be a catalyst for things to kind of turn around and go? And I'll start off by just a few things that I've kind of noticed too. But Chris, you hit at it right there. Is cash on the sidelines is still extremely high, both at the institutional level and even investor level. And so what happens is that's, to me, is like fuel next to the fire, right? It can only sit there so long before it goes back in and get ignites and kind of is that catalyst for growth when things are depressed, right? Because there's people with a shopping list that are ready to buy when they feel things have bottomed, and there's a lot of cash to drive those markets back up. The other side is too, corporate earnings, 70% of the companies so far that have reported the first quarter earnings are still been positive. Now, future and forecast growth levels may be less than what people wanted to see.
Kyle, positive meaning positive over quarter
over quarter.
Yes.
Yeah, exactly.
Not just that they made money, but that they're making record amounts of money.
Growth, 100%. Yes.
Yeah.
And so, but that's the thing. And maybe they're forecasted for the next quarter or the year might be lower than what the analyst wanted to see. These companies are still profitable and still making money. And so that to me are two things that on top of, I still think there's the I don't know what the word I want to use is, but it's coming out of the COVID and that, tendency for people to want to go do things again. Right. And that desire to travel, like we talked about earlier, and spend that money, I think are all things that could potentially fuel this market to kind of turn around and will be there to be positive once it kind of does bottom out.
Yeah. And like you were talking about earlier, negative earnings growth is the difference between a company making $100 million profit in a year and only making a $99 million profit. That's you're technically down over the last time you reported, but you're still making a lot of money.
I remember when Amazon crashed because they only made 110 billion and everyone thought they'd make 111.
Yeah.
They still made 110 billion dollars in a quarter of revenue.